Goldman Sachs raising its share buyback forecast for S&P 500 companies. The firm citing stronger than expected mega cap tech earnings growth here within this and the reasoning for it. And one of the huge things that is going into it in this note, they said they expect 16% growth in share repurchases from those companies to $1.08 trillion in 2025. That comes after a rise that we saw or expecting to see in $925 billion worth in 2024 here.
Yeah, certainly. I mean, this is largely viewed as a win here for investors when this, in fact, does happen with stock buybacks, because it obviously reduces the number of shares available. So if you do have a dividend-paying company, then you are then going to be getting more dividends on each quarter, however often it is paid out. So largely viewed as positive for investors. And this is also, I think, a positive sign for the state of the economy right now as well, right? When you have companies that are feeling better about their balance sheet, feeling better about the opportunities that they see in front of them for the remainder of the year and over the next several years, it's a positive then in terms of what the return could be for these companies over the next several years. So again, Goldman sees this trend that we've seen play out over this past quarter. It was a record number of buybacks, I believe, announced earlier in the quarter here, first or second week of February. So they see that they see that trend, I should say, playing out here, exceeding $1 trillion for the first time ever in 2025. So we'll see.
Yeah, one huge thing that I would track, if you're looking at any of these companies that have already announced a buyback program or adding on to it, is the pace at which they're continuing to buy into it, of course, especially at some of the higher valuations when you think of the tech companies out there that have multi-year long plans to really commit to these share buybacks. Perhaps some of those, especially as they're looking at extremely high share prices, that somewhat because of their operational excellence, and some of that because they're just in a hot market right now, or are beneficiaries because of the AI annexation. One thing or another, the pacing at which they're actually executing on that buyback program might be incrementally important for viewers out there and investors to continue to track on a quarter-by-quarter basis when they give updates on where they stand within that broader buyback program.